Do you want to know how stock buyback works and how that affects your investments? I will give you the answer you're looking for. Welcome back, guys, I'm Chase Ark. Let's go straight to the point. Stock buyback is the repurchase of its own stocks by a public company. The public company buys some of its own stocks from investors to reduce the number of outstanding shares. Let's see what this means for the investors. A decrease in the number of outstanding shares leads to an increase of the stock value. Imagine that the company value using discount cash flow is $1 billion with 1 billion outstanding shares. This means that the fair value of one share is $1. Let's say that the company buys back 10% of its own shares. Now there are 900 million outstanding shares with the same company value. This means that the fair value of one share is $1.11. A higher stock valuation could lead to a higher stock price. That's great for an investor. A lot of investors look at financial ratios when they want to quickly analyze a company, and some of these ratios can benefit from stock buyback. Let's think about financial ratios: return on assets, return on equity, earnings per share. Return on assets measures how efficiently a company is using its assets to generate profit. Return on equity measures how efficiently a company is using its equity to generate profit. Earnings per share measures the amount of earnings per share outstanding. When a company uses cash to buy back some of its own shares, total assets are lower, so return on assets is higher and return on equity is higher. With less outstanding shares, we have an increase in earnings per share because the earnings are the same, but there are less outstanding shares. Recently, a tax on stock buyback has been introduced. The Inflation Reduction Act introduces a new tax, 1% excise tax on stock buyback. This tax will take effect in 2023. For a public company, stock buyback is a way to distribute earnings to its shareholders. It's not a direct way because the public company is not giving money to the shareholders, but it's increasing stock value by buying some of its own stocks. A direct way to distribute earnings is paying dividends. Let's see a comparison. Stock buyback versus dividend. Stock buyback increases stock value. Dividend doesn't. Stock buyback tax rate is 1% in 2023. Dividend tax rate depends, 0%, 15% or 20% for qualified dividends. Stock buyback doesn't give you cash flow. Dividend does. With dividends you can get cash without selling your stocks, so without losing ownership. Thank you for watching, guys. Subscribe, leave a like, see you next time. Bye.